Welcome back, everyone. A Roth IRA is one popular way to save for retirement, especially if you're seeking ways to save without paying Uncle Sam. According to the Investment Company Institute in 2022, more than 4 in 10 U.S. households owned IRAs. And while traditional IRAs were the most common retirement vehicle owned by households, Roth IRAs can play a very important role if you're seeking a tax-free way to save for retirement. So joining us live right now here in studio is financial expert Kimberly Washington to tell us more. Let's start with what are Roth IRAs and how do they differ from those traditional ones?
Right, so a lot of people know about the traditional IRAs. Of course, you can put money into a traditional IRA and you can get a tax deduction. Of course, it can reduce your taxable income, but a Roth IRA works a little bit different. You're allowed to put money into a Roth IRA, and of course, the amount that you contribute is not tax deductible, but the money can grow tax-free. So that's the biggest difference between the two. And we're talking about the earnings of the IRA. So that's the biggest difference between a traditional and a Roth IRA.
And then you mentioned, Kim, those tax advantages of a Roth IRA. Tell us about exactly how that works.
Right, so that's why a lot of people, of course, they love the Roth IRA because, number one, you have tax advantages. When you put money into a Roth IRA, of course, the money is after tax, so it's already been taxed. So your earnings will grow tax-free. And keep in mind, it could be a great tool to use, especially if you're thinking that, of course, once you're older in those retirement years, that your tax bracket is going to be just a tad bit higher. Keep in mind that there are some rules when it relates to, of course, how much you can contribute to an IRA. It is based on your income and some other factors, so you do want to do your research before putting your money into a Roth IRA.
Yeah, and then speaking of that, how much can someone contribute into a Roth IRA?
Right, so it does change from year to year. For 2023, the amount that you can put in $6,500 if you're under the age of 50. The amount does increase, of course, if you're over the age of 50, an amount up to $7,500. Prior years for 2019 and 2022, the amounts were $6,000 and, of course, $7,000 if you're over the age of 50. But keep in mind that you do need to have earned income. You do need to have also some other rules that you have to abide by. It does depends, of course, on your filing status, your overall household income. All of those things does play a major part exactly how much you can contribute to a Roth IRA.
Lots of information. Yes. Anything else you think is important that people should know?
Right. A lot of people don't realize this, but there are no age limits when it comes to Roth IRA. So get this, you can put money in it for your kids, but they do need to have earned income. So it's a way to get started with them so they can have an investment once they get older. But the biggest takeaway, your earnings do grow tax-free. But remember, contributions will not decrease your taxes. But it's something definitely to look into for your retirement accounts.
Yeah, another good tool. Thank you, as always, for being